Lorraine Hutchinson is BofA's senior retail analyst. And Lorraine, first of all, the message from Walmart seems to be that the economy, dare we even say the consumer, is doing pretty well right now?
I would agree with that. I mean, especially the value-oriented retailer like Walmart, but really like TJX or like Ross stores, the consumer is looking for value. Inflation cumulatively over the past 3 years is 22%. So the U.S. consumer, after they spend on necessities, they're really trying to find the best value for their money. And that's one of the reasons why we think off-price is so well positioned for the environment over the next several years.
Absolutely. The value, proposition remains a top one. Look, Walmart's prices were 20% below competitors in a recent survey we discussed. TJX and Ross offer similar value. But is the pace of consumer spending sustainable, you think, for the next few quarters? Or are we going to hit this inflection point where those excess savings have run out, the bank accounts are back to pre-pandemic levels, delinquent? I can paint the scare scenario.
Yeah, I mean, I think that is certainly one of the scenarios we look at. But what we're also excited about is the first signs of trade down. So a wealthier consumer is starting to look to places like TJX to find the brands that they love for less and really looking for that value. They have fewer dollars to spend. They want to spend it on higher quality products, and the branded offering at a store like TJ is a great way to do that.
There is, you say, going to be a modest weather impact. Perhaps you've lowered your estimates for Burlington, Ross, and TJX a little bit to account for that. And there's a shorter spending time frame between Thanksgiving and Christmas this year.
You're right. We did lower our estimates heading into 3Q earnings. We are now toward the lower end of guidance versus the higher before. October was the second warmest October in 130 years. So wow. That really does push some of the cold weather spending out of October into November, which for these companies is in their fourth quarter. Because off-price is a lower income consumer, they tend to buy closer to need. So you may not buy your child pants until the day gets cold, or you may not buy a coat until you really need one. And that's what we're seeing here. I think the quarter is likely off to a better start in November because the weather has finally snapped. We did lower our estimates, but we don't view that as any type of longer-term issue. I think it's a very short-term problem in October that we think has already been remedied in November.
No, as you say, these are buys across the board here. I mean, these are really transformational and very, very successful retailers. So do you look at the risk of tariffs at all? What happened to these companies under the first Trump administration, and how do tariffs affect, if they affect at all, their kind of unique supply chains?
We typically look to periods of disruption in the supply chain as really positive for off-price. So if you look at times when the supply chain was backed up, there was too little, too much inventory, off-price can typically come in and capitalize on opportunities as we see them with supply.
All right, we'll hear from TJX. I think is it Thursday before the bell?
Tomorrow morning.
Tomorrow. What's today? It's today too. Okay, Wednesday morning before the bell. Thank you. The weeks are flying by, and these companies just keep winning, as they've shown throughout so many different kinds of business environments. Lorraine, as always, appreciate your time today. Thanks for joining us.